Hello, everybody. Thanks for joining us on today's webinar. We have a great panel of folks together. We'll do introductions in a second, but I would say it's great to see everyone, though we can't see you, but it's great to be chatting with you, and I trust you're going to find this discussion really fascinating, all about redefining payment checkouts and the road ahead in APAC. My name is Sean Ferrari. I'm the moderator for this webinar. I work at Currency Research, where we do networking and events, as well as some publications, all in the cash and payment space, really focused on the central bank and financial institution layer. I'm thrilled to be joined with a panel of experts. So before we jump into the topic, I'd like to have everybody introduce themselves, say hello, maybe a little bit about yourselves and where you are in the world. Right now, I'm based in Washington, D.C. myself. This week, I, however, am more local to the APAC crowd. I'm over in Bali at one of our seminars that we're running there. So good to see everybody. Lokesh, why don't I start with you? A little bit about yourself and where in the world are you?
Hey, Sean. Nice to be here. Thanks for inviting us. So my name is Lokesh, the regional business owner for Thales, where I lead our digital payments portfolio in APAC. That means helping issuers, merchants, and fintechs adopt innovations like tokenization, click-to-pay, and passkeys. So I'm sure we're going to talk a lot more about it. And I'm, by the way, based out of Singapore.
Awesome. Sounds good. I'll connect through Singapore on my way home tomorrow, so I'll wave.
Yeah, looking forward to meeting you. Yes.
Yeah, likewise. Duranta, how about over to you?
Sure. Hi, Sean. Hi, everyone. This is Duranta. I'm based in Singapore as well. So I've been in consumer and digital payments for last 20 years. I've worked across issuing, processing, acquiring, and then acceptance products. Presently at WorldPay, I take care of the strategic expansion and the enterprise product vertical across all of our APAC markets. Like we help to enter into the new markets, improve the value prop of the existing markets. We localize our offering so that our enterprise and global merchants, they can accept payments locally and in a compliant manner. Over to you, Sean.
Great. Thank you very much. Appreciate that. How about just going up my screen here? Huni, how about you?
Hey, Sean. Good afternoon, everyone. This is Hani here. I work for Visa, been in payments for 20 years now. I lead product management, do all things tokenization. I'm based out of Singapore. Yeah, thanks.
Great. Thank you very much. And Mila.
Hi, my name is Mila. I'm Ukrainian, but I'm based in Philippines. I work for Tonic. Tonic is a digital bank, the first digital banking license in Philippines. So we are a licensed bank. We started around 4.5 years ago. Yeah, and what I do, my official title is Chief Growth Hacker. I'm responsible for growth, which also includes products and marketing and sales of certain business lines.
Awesome. I always love job titles. I think Chief Growth Hacker is one of the cool ones that's out there.
Yeah, you know how my team calls me Chief Mother Hacker.
Chief, okay. There you go. I like it. All right. Well, thanks everybody for those introductions. And for those listening, we do also want to take your questions throughout this webinar. So as you're hearing us discuss things, if you have a certain question that you'd like us to discuss or topic you want to make sure we hit, please feel free to include those in whatever stream you're watching this on and into the comments. And we will see that here and address that as best we can. So with that, let me just go say a little bit about what we're going to talk about today, and then we can jump into some discussion. So really, Asia, as everybody here well knows, and those listening are well familiar with, is such a dynamic payment market, right? And we have so many different digital payment innovations that are out there and coming to fruition at point of sale, and it's thinking about how a consumer or a financial institution or a retailer chooses to implement those and the best way forward can be complex, and there's new things coming out all the time. And we're going to really dig into click-to-pay technologies, passkeys, tokenized transactions, cloud-based payments, those sorts of discussions today. And we're gonna start kind of focused on regional trends, and then we'll dig into some more specifics on how click to pay is transforming the online checkout experience, and then the roles of passkeys and cloud token frameworks, and then some best practices and how things that we're seeing now are a little different than what we may have seen before in some earlier attempts at some technologies that may have been like this. So that's kind of an overview of how we'll structure the conversation. First, I think it's always useful to kind of hear some insights on regional trends and what everybody thinks is shifting consumer behavior and market dynamics right now that you're seeing from your vantage point in this ecosystem. So not to put anybody on the spot, but I don't know, Lokesh, if you have some thoughts on just general trends and what you're seeing in dynamics right now.
Yeah, sure. So I would say today that if you talk about APAC, and I guess it's also a general trend globally speaking, but specifically in APAC today, I think first thing that we are noticing is the networks are all in on tokenization, right? So if I were to give you some data points here, and Hani, please keep me honest here, because I'm already with the outdated numbers because tokenization is growing at such a fast clip. I think the last announced numbers from Visa were about 12.6 billion network tokens that have been issued, which are 44% year-on-year growth from last year. And if we were to have some context, it's about, if you talk about credentials, payment credentials, card credentials, they are about 4.6 or 7 billion of them. So can you see the difference, 4 to 5 billion credentials versus digital tokens, which are about 12.6 billion plus. And this is just Visa's network. If we add other networks in place, there are just billions and billions of tokens out there. So number one trend, I would say mega trend, is tokenization, which is the technology that's really powering all the cards payments today, whether it's tap and pay or it's e-commerce. So that's one. Second, I think there is a requirement today to, there's again, network-led approach where you have guest checkout experiences being transformed. Today, we are still used to filling up the manual card entry into those guest checkout forms that we have, and click to pay is a solution that's being promoted. So I'm sure we'll talk more about it. The other thing is frictionless transaction approaches are also being introduced, and passkeys is going to become one of the key components of that. So something I'm looking forward to speaking later today. But primarily, if I were to tell you in APAC today, I'm based out of Singapore, we have just so many wallets out here. So if today you want to go pay online or you are in person, you have about 6 or 7 wallets that you can use today to pay. And in these wallets, you have a mix of global tech companies like Apple Pays and Google Pays, and then you have some local payment methods using QR code based primarily. So yes, I would say digital wallets everywhere. That's the primary choice of payment method. And that's underpinned by tokenization and the upcoming technologies of click to pay and passkeys. That's going to be the next 12 to 18 months of changes in the market.
All right, great. No, thanks for that. It is true. There are, when I think about the number of wallets that are available in some markets, it is exciting to see that's starting to happen. I think what will be interesting to see is if that does consolidate at some point in the future, or if it keeps kind of proliferating for a while.
Yeah, I think in the end, in my view, there is a cognitive overload, right? So in the end, you end up choosing your preferred wallets, right? So for me personally, I have a couple of wallets that I always fall back to. Depending on the merchant, subconsciously, I pick the right wallet. And you're right. So at some point, there will be a consolidation of wallets, or some wallets will become more preferred over the others, right?
Yeah. Yep. Cool. Honey, I think your name was invoked there. Maybe your views on what you're seeing from the Visa standpoint.
So definitely, look, e-commerce has been growing much faster than face-to-face transactions actually. And within an e-commerce, I would say transactions initiated through mobile are even growing faster. And tokenization, I would say it's a solution which provides the safety, security, along with the convenience, actually, particularly, let's say, with the cloud token framework, and now click to pay being done on top of the tokenization as well. Now, in our last earning call, Ryan, our CEO, did call out that our eventual goal is to have 100% transactions on tokenization by 2030. So, yeah, that's a way to go.
All right. Well, a very topical discussion for us to have today, for sure, on that tokenization front. Maybe Mila, I'll just turn to you for a minute. I mean, I think you may have a slightly different viewpoint, being the digital bank tonic, and what your vantage point into this market. What are you seeing for trends out there right now that you're observing?
Yeah, our market is definitely different. I mean, you guys have so many wallets, good for you, but you also have banks. What we see here, and actually, if you see by the top mobile wallet adoption countries would be the ones with developing economies, where the banks cannot yet keep up with the pace, and hence the wallets, they have a head start. For us, I think the number of Gcash users is significantly higher than the number of adult users in Philippines in general. So it's basically close to 100% penetration already. But the main reason for that is imperfect banking solutions. And it's difficult to open an account. There are many people that cannot open an account. And I think this reality is not just Philippines. Many developing countries where the banks, traditional banks, do not support the trends of digital payments, the e-commerce. It's still a bit difficult. And from what I see here, definitely the QR is taking the vacant place on the stage, and definitely the cross-border transaction compatibility of QRs cross-border. That's the next thing, since, as you know, Philippines, I mean, the biggest import probably of Philippines are the workers. So these remittances and cross-border transactions become the most important. And as you know, there are multiple initiatives with both QR in acceptability in different countries. And there's a Nexus project in Singapore that involves Philippines. So solving this painless and swiftless cross-border transactions is another trend.
Okay. Yeah, for sure. Cross-border. We've had a lot of discussions at different events lately, some that we've run and others that really focusing on this cross-border issue. There's definitely a lot of new technologies out there that are helping, but there's a lot of work to be done for sure in that space. So cool. Thank you for that. And then Duranta, how about from your vantage point? What are you seeing as some trends out there?
Yeah, sure. I'll try to complement what has been spoken already. So, from WorldPay, every year we publish global payment reports. It is just free online, and you guys can have a look at it later. So what we have found out, just to complement with some numbers, by 2027, we believe that APAC will contribute the largest, that is more than 50% in e-commerce or non-cash transaction volume. And what we see already for last year, around 74% of the transactions are already via digital wallets. Just singing in the same tune of what Lokesh has already spoken about. But I would try to give it a bit different angle. So the remaining part, as we know, APAC is very diverse. And we are here going to talk about mostly card-based transactions, but we have number of APMs in these developing markets, right? So while click to pay and all we are talking about here, but when we are offering to our global merchants a localized solution, we see that these checkout experiences for the cards versus non-cards in the APMs are a bit fragmented and not very uniform. Maybe we'll talk about it a bit later. And when we are working with the regulators, so I'll just talk about a bit of the regulation trend. So we know the network tokenization is happening everywhere, and we are very bullish on that. So WorldPay has its own revenue boost solution for optimization. What we do, we prepare a turnkey solutions for merchants wrapped around this tokenization and account updaters, etc. But then when we are working out, we are seeing that a lot of domestic networks, let's say India, the network tokenization happened in a very different way locally a couple of years back. We are seeing in Japan and Australia, the local domestic networks are also started to offer their own tokenization methods, and also planning to roll out their own click-to-pay. So fraud, security, transaction security, and overall healthy digital payment ecosystem is something that the regulators and the markets are also looking at because of this high volume of transaction growth in the digital wallet space. So that's one of the trend I just wanted to complement with the discussion here.
Yeah, no, thanks for that. I mean, I think, we mentioned the variety of these, and we'll get into some examples with, especially with click to pay in a second. What do you guys think about the importance of kind of the interoperability between all of these different systems? I mean, how much trouble are we going to be in if everyone has to stay in their own kind of ecosystem, or do you see it, even with what's out there available now, the ability through tokenization and others to transact between wallets or get outside of that individual ecosystem? Tarana, I don't know. I can start with you if you'd like. You're already unmuted there.
Yeah, sorry. I just realized that. No, this is something we really need to solve. So I think from the network tokenization perspective, today it's still separate, right? I think Honey would know much better than me and throw some light on. But the challenges that we face that each of these markets or the local regulators, when they are coming up there with their own network tokenization, and as they are not interoperable today, it is just going to cost the PSPs or the acquirers much more investment to streamline all these operations. The merchants would have to work accordingly in the same way. It's an investment from their side as well. While for the shopper, it may be transparent, but this is something I was planning to bring it up, at the future section, if we are going to talk about. So this is something we really need to focus on and improve as an ecosystem.
Sure, fair enough.
Look, probably add to that, I'll say that both the large networks, the tokenization has been done on I would say EMV code tokenization framework. And as such, I do expect that local networks will be pursuing the same as well. And one of the important thing I would like to call out that tokenization eventually forms the base layer for click to pay, and again, click to pay is something like we all know that previously there were too many wallets actually, and again there are too many wallets right now as well. But we have tried with let's say Visa checkout and Masterpass and some of those things. Now with click to pay, that has become a standard now, where it works for all different payment networks as well. So yeah, standardization is the way to go forward actually.
Fair enough.
Yeah, I think I second that. It's absolutely. I think most of the things that we're talking about today, whether it's tokenization, it's based on EMV core standards, which is an industry standard, right? So tokenization is the foundational layer, as Honey alluded to. And it's interoperable in that sense because it's the common specifications that are being followed by different networks. Then if you talk about click to pay, it's also based on a standard called SRC. Again, it's managed by EMVCo. And then if you talk about the authentication, there is a standardization there as well. So when we say passkeys, actually passkeys is based on a standard called from FIDO Alliance, right? So it's the marketing name is called Passkey, which has been adopted now by the big techs like Apple, Google, and Microsoft and everybody. So we call it passkeys, but actually underneath this is led by a specification, a standard. And therefore, interoperability is, as you mentioned, Sean, it's absolutely necessary for things to scale. And I think one of the things that we have is then we have the other world of QR codes, right? So this is where you have, we started off with like 10 QR codes printed at a merchant's shop initially, which has now been harmonized more or less in most of the markets. We have a single QR code. So in Indonesia, you have a QRIS, and in Singapore, we have NETS. In different markets, we have other QR code standards. So you have pretty much streamlined at least the number of QR codes that are present. Second, I think there is interoperability angle. Most of these wallets are today domestic play, most of them, right? So you can pay in countries, but there are some bilateral connections or linkages that have started to happen. So just last week, I was in Malaysia. I was able to use my Singapore Payla wallet, a QR code-based wallet in Malaysia. And I was also able to use it 6 months ago when I was in Thailand for one of the events. So I already start to see that there are some linkages between the QR code based systems. And by the way, these QR code systems are underneath it. They are relying on real-time payment systems, which are also something that's coming up in a big way, or they are relying on a card-based source of fund. So again, if it's a card-based system, then you're again relying on tokenizations to power all that, right? So in a way, it's all coming together in that sense.
Yeah, no, I think that is a good way to look at it. The underlying framework is there. It's how are the connections made at this point. So we're progressing there. Cool. Well, let's make sure we get to some click to pay discussion. So how about click to pay as an example of what we're talking about here? How is that really changing the market right now? Where are we with click to pay? What are the main takeaways right now folks should know in that space? Honey, how about you want to say a few words there?
Yeah. Look, click to pay, like I said earlier, it's an EMV SRC standardization. Uses the tokenized credential, cross-network interoperability, and as such embedded strong authentication as well, with an integration of passkey, which is again a FIDO standard, as Lokesh earlier called out. We believe that it provides the right combination of security as well as the frictionless checkouts without requiring the need to put any card numbers or so. So we continue to see adoption of it. Different markets are moving at a different pace, and clients are actively working on it right now.
Okay, Lokesh, do you have some additional thoughts on what you think of how click to pay is changing the landscape right now?
Sure. Again, maybe the starting point is the standards. It's based on, like Honey alluded to, it's based on a standard called SRC, Secure Remote Commerce. And actually, click to pay is in its second iteration, in my opinion. So the first version came out, let's say, 3 to 4 years ago, which was a network-led model in which the end customer or the cardholder was expected to actually enroll with the networks. Like, so you would go to a Visa page or a MasterCard page and enroll your card with them. So you can see that sign as soon as you see the sign on a merchant page, where click to pay mark is there, and you would probably try to use it. But I would say it probably just got constrained or restricted to a pilot for many years. This time around, there is a different model that has been pushed out. So click to pay this time around is an issuer-led model. This is where the issuers are offering this as a card level feature. Right, so this is one big difference of click to pay that we see here, and there is a better chances and probability of this model scaling, because first of all, the expectation is that it will become a card level feature. So as you see today on your physical card, there is a mark, contactless mark. So as soon as you see a contactless mark, you know your card can be used in touch payments, tap payments. Pretty soon you will start seeing the artwork on the card. Physical cards will also include a mark of click to pay. So there is this period of education that will come through where customers will find out that your card is ready to be used in online commerce. Anytime you see this mark on a website, you can use it. Right, so this is number one. In terms of the stage where click to pay is at in this new model, it's at the beginning of it. Today, both networks, specifically, I would say today, Visa and MasterCard are two main networks that are really pushing the scheme in the region. In APAC, I would say there are 6 or 7 markets where Visa is pushing as a mandate click to pay. And then you have, and Southeast Asia amongst them. So Singapore, Malaysia, Hong Kong, Philippines, Vietnam. And then you have MasterCard also pushing in Australia, for example. Japan is also coming up. And so it's in the early stages where issuers are now implementing this new model where they will be launching this as an issuer-led card level feature. So I would say we are in the early stages of click to pay in this new model, and in coming years we should see a lot of markets launching. And obviously this is a chicken and egg situation, right? So on one hand you have to enable the issuers, on the other hand you also have to enable the merchant side. So this is where I'm sure we will hear a lot from both Visa and MasterCard to also enable the merchant side situation.
Yeah. for sure. Honey, do you have some additional thoughts on that aspect?
Yeah, look, of course, we continue to work with the merchants, like I said earlier as well. We have been working with clients across the payment ecosystem, enabling both the issuers as well as merchants and merchant partners as well. Yeah.
Yep.
Can I add something to this topic as well? Maybe a little unpleasant and uncomfortable, but I just want to say that that's bloody expensive. That is expensive for the customer, and that is expensive for the issuers. And this situation can continue, but it's not sustainable in the long term. So by the time I just today somewhere I saw the chart that the half of the global revenue on payments is coming from Southeast Asia, because a lot of transactions and they are expensive. So if you check the developed countries like America versus Southeast Asia, let's say Philippines or whichever, on the rich market in the rich countries, even less revenue than here in Asia. It's given the way to the disruptors, to someone who is able to do it cheaper. And maybe, of course, my view is a little bit distorted by the fact that I live in the developing market, and we see that the market here is very different from Singaporean. But people will not adopt the post terminal. People will not the mass market merchants. They will not adopt the proper online checkout because of the fees. Because QRPH, which became in this case the disruptor, is much cheaper. That's first thing. Second, it's real-time settlement, which is important for every merchant for the fast goods working capital. And also, especially when it comes to the offline checkout, to get a POS terminal, or you have to pay yourself, which is, again, for the small stalls, for the small merchants, is expensive, or you have to qualify the criteria with the bank to be given. So, and that, it's kind of outdated, old school standards that just do not apply to the markets like ours, and I'm pretty sure many other markets, where eventually the checkout is, card checkout is being replaced by the by the QR checkout, just because it's cheaper, it's more fit into what people need. And yeah, that was the unpleasant truth.
Yeah, probably.
I think it
Go ahead.
No,
go ahead.
No, I was going to say it's a perspective for sure, and it's worthy of discussion. Absolutely. I mean, I think the adoption of these types of payments is critical, and there are always things that push on that adoption, right? The cost, efficiency, user experience, all of those things play into it and are different in every market. I think you're right. So I'll switch to adoption, but I don't know, Honey, if you have some comments there, I'm sure.
Yeah. Look, I was saying that, as I said at the beginning, e-commerce, or in fact the payments initiated from mobile, they are growing much more faster than any other payments actually. And we believe that these payments, they should be fast, and they should be safe, and they should be integrated actually, and click to pay as such is a right investment from an entire payment ecosystem perspective, which is, I would say, works across the platforms, across the schemes, and provide that experience. Yeah.
Sure.
If
Duranta, yeah.
Yeah, if I may add, I agree to what Mila is saying, but just want to complement that with, there are various merchant segments, there are various consumer or shopper segment, right? So we know the account-to-account payments or the QR payments are, going at a very faster rate in the developing and emerging economies, and the cost of that payment is much cheaper. But if you look at, there are certain merchant and the consumer segment where the ATV is very high. Like you talk about airlines, you talk about hotels, right? So in those cases, a shopper may choose the card by default because there are rewards attached to it. So there are various use cases and scenarios. So we will definitely talk about the challenges in adoption and what can be done. But just to share that the click-to-pay's relevance still exists in the market, because previously we did not have a proper seamless experience for the guest checkout transactions. We already had tokens to take care of repeat transactions or subscription based, but click to pay actually resolved that problem by having not having to fill up all these guest checkout transactions. So there is a real use case benefit. But again, yes, there are various payment methods, and developing economies of the markets behave in a different way, and the consumer payment behaviors are a bit different and varies across merchant segment.
Yeah, and I'll just also second that. And my view is that I agree, Mila, that it's country mix matters, right? So we look at different countries and there are different strongholds. I would say traditional card payments are very strong. If we look at APAC, in Australia, in Japan, in Singapore, at the same time, growing economies and emerging markets such as Philippines, I think there has in India, including in fact, a lot of people were not using cards, and they have started their journey in digital ecosystem using QR code based systems. But I think there is this thing: once you enter a digital economy, you leave your footprints, and then you qualify. You have more data points, and then you would probably, as a digital bank, be able to offer them credit options, credit offers, and maybe a credit card product in future. So eventually there will be a convergence. More and more people, as they come into the financial inclusion fold, they get used to of making payments online. They will have more and more products in their hands to use. And once they have it, the product that will eventually stick is the one that brings them the maximum convenience and the value. Right. So I agree from merchant point of view, today QR code or real-time payment systems might be cheaper, especially if you are a smaller merchant, etc. But like it was just mentioned that, when you are shopping cross-border, I think cross-border is one example where you need, if you really want to have a reliable payment method, I would still, personally believe that card payments are still ruling the most, right? Because that it will work. And so you need at least a debit card in your hands, and therefore we need everybody to have a bank account. So they have a debit card and they can shop online. And because cross-border, you mentioned, is also, although the real-time payment systems in APAC, they are now getting connected through the Nexus project, like you mentioned earlier on. And maybe there are some bilateral agreements between multiple countries, but it's still some ways to go. And I agree, eventually there will be a healthy mix of real-time payment systems, QR code systems, and card payment systems. But by and large today, I would say 50-60% of global e-commerce transactions happen on card payments, on card rails.
Yet,
yes.
Yeah.
It's going to be competition. So end of the day, the best payment method will win in different markets.
No, I agree. I mean, from what I heard just now, sounds like in maybe, 20 years, card transactions will turn into the niche product for wealthy people.
Yeah, I think one of the things that is interesting in this is I remember a graph that the chief payments officer at the Federal Reserve showed a couple of years ago, and it showed all different payments as they've been implemented back through time, right? Starting with like the Yapstone and moving up through checks and traveler's checks, and then the digital payments that were going on. I think what was interesting was more and more payments get added, and the types of payments within a bunch might converge, but we keep adding more payment things, and very rarely do we actually remove things, because there's a user segment for most of the payments that are out there, and it's just finding that right user segment for that right payment. As you say, some will gravitate towards one and some will gravitate towards the other, and we keep adding. So there's place for all of this. So if we move to kind of, I think, user experience, I think there's this friction that some of these payments have between seamless user experience and friction that might be caused by security or compliance or those sorts of things. How should we think of that in a tokenized world? That kind of inherent, or I guess that could be a question too. Is it an inherent struggle between security and seamless, fast user experience, or how are we progressing in that space? Who wants to take a first stab at that? Honey, go for it.
Yeah. Look, the general perception is higher the security, higher the friction, actually, But as we continue to move to the mobile payments, and fundamentally what the thing that has changed is like mobiles are the personal devices actually, so which means that once you identify that, hey, this card transaction or token transaction happened from that mobile device, and if you can prove it with certainty that the next transaction is going to come from a same combination, you can eliminate that friction as well. So to answer your question, uh, as we continue to move to the, I would say, personalized devices, the friction is slowly getting away actually. And that's some of the things that I would say the combination of click to pay plus passkey intends to resolve for. Yeah.
Okay. Yeah, I mean the passkey piece, I would assume, plays a big role here in making security pretty quick and
Absolutely.
easy.
Yeah. So in the past, OTP or the one-time password has been the de facto standards for authentication actually in so many markets, and now they are being replaced by CDCVMs or cardholder device card verification methods, which are being powered by the passkeys. Yeah.
Okay. Look at.
Yeah, absolutely. And I would just say exactly the same, that the friction point when you shop online is typically, the number one friction is you need to have your physical card with you to be able to first enter all that card data into the checkout form, right? That's where the friction starts in the first place. And many a times, and I, for example, shop for my father, a lot of times he needs to book a hotel or an airlines ticket. I'm the one doing his shopping for him. And he lives in Indonesia, and every time I'm using his card, many times the card gets declined. And the simple reason is perhaps he has not given me the right number, or I have not heard the right number. And so I need to go through that buying process again. So here, if there was a checkout process where I didn't have to actually fill up that form with the address field as well, which could automatically be populated, that's the first friction point to solve. And this is what Click to Pay is promising. It's basically entering your email ID or a phone number. That's a user experience you kind of building in. And all the connected cards that exist with that email ID will pop up. And this will automatically be filled. And again, this is powered by the security of tokenization underneath, right? So it's a easy way to check out, number one. So that's first friction. The second part of friction normally in an e-commerce transaction is when you receive an SMS OTP, right? So now there are various methods being tried. Technologies are there. So when you use 3DS, this is called the 3DS technology. So you have SMS OTP being sent to you. Again, there is a redirection that happens between websites or in an app. So it's not a very optimized solution. And this is where, again, a lot of cart abandonment happens. So again, a promise, there is another, so Passkeys has the potential to actually remove that friction point again. You are simply going to use your device's biometric, which by the way, today exists in 90+% of devices worldwide. So we are quite used to of using biometrics to open our phone and logging into our banking websites. Using that same experience and using the FIDO technology underneath to power the authentication seamlessly and securely will remove the second part of the friction in the transaction. And this is going to simply improve the authorization uplift. It's going to reduce cart abandonment and all that good stuff that comes with it, right? So merchants are going to sell more if they have less cart abandonment, for example. The second aspect, I would say, friction. This is more in the guest checkout scenario, but we can also look at the friction in the card on file scenario, for example. So if you, I mean, most of us are using streaming streaming services like let's say Netflix. And one of the key issues that these merchants face is the expired cards, right? Again, this is where one friction point as an end user for me, when I receive my card, expired card, which has been renewed, and I go back online, I find it very hard to update my card credentials in each and every website manually. So this is where the friction point is reduced by tokenization again, because those, thanks to the lifecycle auto updates, the network tokens are automatically refreshed. They're always updated. As a consequence, there's about 4 to 6% of approval lift, and there's a sizable fraud reduction that has happened. So you are combining the user experience, reducing friction, improving fraud numbers, improving approval rates. So this is just amazing, and I think this is how we have to manage it, managing all the frictions with all these benefits that come along with these new technologies.
And adding numbers to what Lokesh said, so globally we have seen 4.7% uplift in authorization on token transactions and 34% reduction in fraud actually. And now more than half of our transactions in e-commerce are tokenized actually.
Yeah, I mean, interesting on the fraud reduction for sure. I think that's key in all of this. You know, it's funny, we all have our personal experiences as we talk through payments. So I don't know if you're familiar in all areas of the world with in the US we call it Girl Scout cookie sales. It's all the kids that are part of Girl Scouts sell these cookies once a year, right? And we have these booths we set up outside of stores and do it. So I man one of those booths, and every year I see how people pay. And it's interesting. It started with a lot of cash. It's still a lot of cash, honestly, but complementing that, it was a pretty big, like a Zelle, Venmo type thing in the US, where it's more sort of real-time payments. If you're talking Zelle, sort of, not really, kind of, but those types of payments. And then it switched over to Lakesh, you were talking about filling out forms and those website things, where it was like an online credit card thing where, you know, I'm standing there typing in everybody's address and credit card number, and I'm thinking the lack of security involved with what's happening right now is crazy. I can't believe people are okay with this. And now last year we did have more of the phone to phone, more Apple Pay type tokenization payments, which you can kind of see it moving in the market as these things evolve. Anyway, long story to say, I can see it out there too as different markets change. What about, you know, in terms of actually having folks and retailers implement some of these newer technologies? What are some barriers that are standing in the way? I mean, Mila mentioned cost, so there's a cost barrier. But how should we think about barriers that are out there to adoption?
Yeah, I would say integration effort or the cost. That's certainly one of a thing, and probably Duranta would want to say to that as well. But other than that, you know, customer education and ensuring that the consistent CI/CX or UI UX across the devices, that are some of the challenges, I would say.
Yeah, interesting one in the consistency across the devices and so forth. I think that's an interesting viewpoint too. Duranta, did you have something there? I think I saw you come in.
Yeah, sure. Sorry. So we have already launched Click to Pay in certain parts of the world, right? And we are really seeing certain benefits. The approval rates are going a bit higher comparatively, and when we are seeing those Click to Pay transactions backed up by token, the repeat customers are growing as well. But as and when, and we work very closely with the partners like Visa and others, right, to roll out. But there are certain things that when we talk to our merchants, and then solving merchant pain points are kind of our job. The kind of questions that we hear, just wanted to share with this group. One is, first of all, you know, they are already offering Apple Pay, Google Pay, etc. Right? So kind of digital wallet. So why would they need to shift towards that? And that's where I think that education comes in a lot of adds a lot of value, and education and encouraging the merchants at the same time. But again, there is a cost of integration. That's what aligning all the parties. So, you know, merchants have multiple acquirers or partners they are working with, right? So if they have to move, they have to align all of them together at the same time to move towards these click to pay implementations, etc. The troubleshooting is one of the key pain points as well, because there are so many parties involved. In case transaction goes wrong, the team would have to look through entire value chain and find out where it went wrong, why it's happening. And if you see, few years back, we pushed the entire ecosystem to talk about, hey, move to OTP, multi-factor authentication. Then we asked them to, hey, move now into click-to-pay solution. And soon we are going to tell them, hey, come into passkeys, etc., backed by biometric. So the technology is changing so fast. So keeping everyone updated along with it and increasing the adoption at the same time is one of the barriers that we are seeing. And also there are certain times when we are educating them, right? The enterprise merchants, the large ones, they have their own payment team. So we can tell them, we can share the benefits. But when it comes to the SMEs, etc., they may not have the dedicated teams who would understand the real benefit, improvement, uplift, etc., or how to change at their end. So those might become a key, might become some challenges as well. So I believe extensive education, marketing campaigns, pricing alignment with those transactions, something that Mila was talking about, all those have to come into place to have a proper adoption broadly into the market.
Is it?
And
yeah, Lukesh, go ahead.
yeah, if I may just, so I work very closely with several issuers in the region, in Southeast Asia, including Japan and Australia as well. And so, for example, one of the things that I find a common rollout challenge is a lot of issuers look at all these new technologies as something that is forced by the schemes, right? It's like a mandate checklist. They have to comply. And many a times there is a lack of understanding of the business benefits or outcomes they can gain from these technologies, right? So this is one big challenge, is the mindset of issuers to actually look at the benefits and implement correctly the all the right things they have to do. Second is they are many of the traditional issuers, not the digital banks. For sure, they have the latest and greatest stack, technology stack. But a lot of legacy issuers are still riddled with their old platforms. So any changes to that platform. So most of these new techs are based on cloud. They are based on APIs, real-time APIs, for example. So this integration work takes a long time, and they have to schedule in, and it's very costly, right? To be able to fix those older systems to make any of these changes. Well, I guess some of these changes are common in most of the countries, more or less. So I think we see this as one of the friction points or rollout challenges that exist every time we have to introduce a new technology. But tokenization is not new. The other part of the equation is tokenization has been in place since 2014, I think, when Apple Pay was announced, right, first time. And that's when tokenization started it. So we have now 10 or 11 years of runway, and we have seen that in different markets, the issuers implemented tokenization a long time ago, and e-commerce has exploded afterwards. So some of the things that they had implemented back then are not anyways common, are not perfectly optimized for e-commerce tokenization. So they're not really benefiting as they can with the tokenized transaction. So for example, in a tokenized transaction, you receive some additional data points, right? So you would receive some device signals, IP signals, some additional set of data that the issuers' fraud models are not utilizing it properly to adapt and authorize and approve the transactions. So I think there is an optimization part that can be now worked on in those markets where tokenization has already been in place for a long time. So this, I would say these are some of the common rollout challenges, as well as the optimization part that needs to be worked out.
Yeah, and I think that's an interesting viewpoint. There's always technology challenges that need to be worked out, and what we often hear in all these is technology isn't the problem. It's whether it's the policies or the attention on it or the business case or whatever. But we can solve it technically. It's just everything else has to line up at the same time. Mila, I saw you came in. You have a thought on this one?
No, I just wanted to add that, again, since our market here is a little bit different, and the biggest problem for tokenization on the online checkout would probably be the card penetration in general, as for many other markets where financial inclusion is not yet solved completely. And I don't think it will not be in the next couple of years. And that's why something I shared with you before the webinar. So I think our market leapfrogged the cards, and the momentum is lost because also that's one thing. Another thing, that many e-commerce platforms already have their own wallets. And while we see the detachment of payments and banks, talking as a bank, yeah, we see the attachment of payments to the actual e-commerce platforms. So TikTok is accepting money directly, right? They can go with card or they can bypass the card. TikTok Shop is very big in Philippines. Lazada, Shopee, they all have their own wallets. So, and that's something, again, disrupting while we are spending time on introducing new technology. They're kind of bypassing us and kicking from the back. Also, what I wanted to add is that, again, I'm here as a bank, right? So let's say for the default checkout here in Philippines QRPH, it's very important. The security part lies not with the technology of the QRPH itself, but with the application, with me, with the bank. And that, I think, is very important, because putting this security in terms of let's educate the customers on the shoulders of actual customers is unfair. Much more important is to ensure that my tech stack is unhackable. And there, of course, it's a little bit easier for me than for you in this case, because I just need to do the biometrics server-based Face ID, and I'm absolutely sure who exactly is doing the transaction, right? And also my application knows so much about the customer, about his normal behavior, his patterns, that is able to spot if anything is off. My favorite example is Nubank's Modarua, which forces you to do Face ID on every transaction once you're out of security Wi-Fi, of secure Wi-Fi, the safe designated Wi-Fi that you confirm is secure. So applications are smart and they know a lot about the customers. So the security here lies with those.
That's a good point. And so, in thinking through, you mentioned kind of how as a bank you think through these things, and how retailers, we've talked a bit about how retail thinks through it as well. Do you think some of the adoption is going to come from, I think, Lokesh, you were mentioning there were kind of checklists and implementation checklists and those things from an issuer standpoint that go out. Do you think implementation is going to come from kind of top down, or is it going to be as you start educating and things get on the card, the symbols get on the card, it's more of the consumer up that are going to be saying, oh, can I not pay like that here? I want to. And so is it top down or bottom up or both?
No, I think it's both, which is the typical way, right? So there is a time frame given to the issuers and merchants to comply, and then obviously there are some benefits that are shared with the ecosystem. So, for example, in tokenization, for a tokenized transaction, there is a discount that is given to merchants versus a non-tokenized transaction, right? From the fee they have to pay. So there is this incentive method. There is obviously at some point the ecosystem will converge. Some markets are always the early adopters, right? So we see Australia, Vietnam in the region are always, like, for example, Australia was the very first adopter of contactless cards. I mean, if you see today, I don't know, Hani, please keep me honest here again. I think more than 90% of transactions are contactless in Australia, if I'm not wrong.
Yeah, about 98 actually. Yeah.
So yeah, face-to-face transaction, 98% are contactless. And I mean, we all start from a baseline from where we have to expand. So I think it's going to be look, this is coming, right? So there is no way around it. For example, MasterCard is not here today, but they have already announced in Europe by 2030, they are going to have 100% of transactions tokenized, number one. Number two, they are saying they will remove completely the guest checkout forms, right? It will only be a solution that we are talking, for example, click to pay. So when these kind of efforts are being put in place, I see in the next 5 to 7 years, I think this will become, if we come back after 7 years, we will see this is exactly the journey that contactless payment took. It takes some time, but over time, I think we will see that there is no way around, and we will all be using these technologies as we are speaking today.
Awesome, thanks. That's a great transition to kind of my last question. We've got 4 minutes left at this point. There's 4 of you here, so in 1 minute each, and Lokesh, I'll wrap up with you, so you can be thinking about this the longest. Kind of where you kind of already answered it, but where do you see us going? What's next? What's the next generation in checkout? What do you see for the future couple of years in this space? So yeah, go ahead.
Yeah, no, I'm sorry. I'm just for me, one thing that we haven't spoken about today is agentic commerce, right? So there's a lot of hype that's going around here. And today, yes, we are talking about tokenization, click to pay, and passkeys, etc. But I think what we have to also think about is there's a huge hype around agentic commerce and agentic AI. And I think in the next coming years, this is also going to become a big topic and how we all shop online. And this is where, by the way, but we come back to the fundamentals. Tokenization will most likely will still power the agentic commerce. So while we might have different payment methods and different frameworks that might evolve, the fundamentals remain because tokenization, end of the day, is a security layer. It's a payment security layer. You're removing the sensitive information from the payments transaction and therefore reducing fraud. So no matter where we go, I think we will always have to build on certain foundations. Tokenization remains, click to pay will remain. I think other payment methods will obviously come into light as we have more and more QR code connectivities across the region. So yes, there will be multiple payment methods, and I think agentic commerce is also going to make a big change in the way we all different frameworks will evolve, different technologies will have to come in.
Awesome. Thank you for those thoughts. Duranta, over to you.
Yeah, sure. Thank you. No, I was about to start with agentic commerce, but then Lokesh came in. So, in my personal opinion, we don't have to wait for 5-7 years. If we are coming back in next 2 to 3 years, I believe, in my personal opinion, again, that we may not be talking about checkout pages anymore. The merchants agents would be talking to my shopping agent or my personal agent model that I'm using. I just would have to give the intent, which, irrespective of whichever payment method I'm going to use, that will be already taken care by my agent. And then the agent that I'm going to use, and then I just have to give that intent, and these agent protocols will talk to each other and execute the payment. So that's how I believe, and I'm hoping for the future of checkout would look like. And all the friction that we have with cards versus APMs, A2As, etc., may become very transparent altogether and may not remain. But again, this is very futuristic, and there's a lot of work need to be done, and all are happening as well for the time being. There are agent payments protocol that people are working with, even WorldPay. And there are already agents are executing transaction today, and the merchant is believing that the transaction is initiated by the shopper, but actually it's not. So that's where I believe Hani might know more than me, that the networks are already working on how to standardize the transaction, reduce the fraud, and building protocols and controls around it to facilitate it. So it's not very far away.
All right. Thank you for that. Mila, let's go to you, and then we'll have last word from Hani. Mila, where do you see us going?
Yeah, sure. I think I want just to put it in one sentence from customer's perspective, not from the tech perspective. It will be invisible. So you won't be able, as a user, to identify the moment when you entered your card details or whatever, when you actually paid it. It will be invisible and seamless. But as an industry, I would want it also to be safe. Yeah, because we put so much effort into it, and yet the scammers still move faster. So what I really think we need to be working on is to make sure our customers' money are with them and not with someone else.
Perfect. Thank you. All right, Hani, over to you.
Yeah, look, I'll say tokenization will continue to power the new payment methods as well, which is whether it is click to pay, which is more advanced, versus the agentic commerce. We also have something called Visa Intelligent Commerce, which is our solution for agentic. And again, the key over here is to finding the standardization. For many years, the payment ecosystem have operated in such a way that to discourage or decline any transactions coming from bots. And now bots are going to be real, actually. So we are coming up with a new standard which are going to power it and provide the same trust, and of course being again the seamless payments, actually. Yeah.
Awesome. Well, thank you all for the time. I hope everyone out there enjoyed the discussion. It was a pleasure chatting with all of you, and thanks everybody for listening. And we look forward to hopefully chatting with you out there, whether it's virtually or in person somewhere in the future. So thank you, everybody. It was a pleasure chatting.